everyone, welcome to your boy FX. I hope everyone is doing great. And today I'm going to show you how to identify a correct POI. What I mean is a point of interest, a correct or a valid point of interest. That's what I'm going to show you basically in this video. And then in this video, you will also learn on how to find out correct pullbacks, correct full pullbacks. So, first of all, as you can see here very clearly, we have our break of structure. I have marked it here very clearly. And then after this break of structure, we have the first pullback here. And then we have a breakout, a small breakout here. And then here we have another pullback here. And then another break of structure. And then you can see very clearly that the market came back and took out this low and this low. And very many of you will be asking why this market came back and then after taking out these lows and then the market went up and broke structure up here. So today I'm going to show you how or why this market came back and took these two pullbacks here, these two inducements. As for me, I call them inducements because they are liquidity traps. So first of all, I will mark my I will find out if these pullbacks are complete or they are incomplete pullbacks. So the first thing I will do, I will take my Fibonacci tool, mark from this low that broke structure up here, and then for the first pullback you can see very clearly that this pullback is not complete. It did not come down to 50%, so this pullback is not a complete pullback. Secondly, the second pullback, you can see very clearly, did not come back to 50% also. So it did not come back to 50, the discount. So and the next one, this one, you can see very clearly it came back to 50%. So this is the correct pullback. And why is it a correct pullback? So let's find out. Let me remove this Fibonacci. So first of all, as the market came down, I knew I was not going to buy from this zone. This zone here. I know very many traders were trapped here. So the first thing I discovered, this here is not a pullback. This here is a complete is a pullback, is a correct pullback, but not a complete pullback. So I knew this one here was going to be used as an inducement, and this one here also was going to be used as an inducement. So the first thing here, no, this is an inducement. First of all, it is not a complete pullback. And then, secondly, after the break of structure, I always look for major inducements and minor inducements. What do I mean by this? Major inducements, these are inducements that form after the break of structure. These pullbacks that form after the break of structure. Like this one, for example, this one. After we broke this structure, there was this small pullback here. This is a major inducement because it formed after a major break of structure. And then the next one, this one is a major inducement because it formed after this break of structure. So, what is a minor inducement? A minor inducement is a pullback that forms before a break of structure. You can see here clearly, this is a minor inducement that formed before this major break of structure here. So that's why this is called a minor inducement. And I majorly focus on major inducements because major inducements are very powerful, such as this one and this one. Major inducements are very, very powerful than minor inducements. So after I saw the market came down to take this inducement, I came here and marked my point of interest. Where will I mark my point of interest? So let me make this very clear. A point of interest is not an order block. A point of interest is not an order block. An order block is different from a point of interest. A point of interest is a zone, an area where you expect the market to react from. And good order blocks should be inside a point of interest so that they can be very powerful. So let me make sure I show you how I mark my point of interest. So I will mark my point of interest from sorry, let me mark it very clearly. So I'll mark my point of interest from the last order flow that the market formed before this break of structure. That's where my point of interest is. The last order flow that formed before this break of structure. What do I mean by this? An order flow is the last move down before the break of structure. Or if you are in a downtrend, you mark the last order flow, that the last impulsive move upwards before the break of structure downward. So for here, you can see very clearly this is the last impulsive move downward before this break of structure. So I'll mark this order flow from up here to the last point here. So this is my zone. This is my point of interest. So this is where I'm going to take my trade from. So as you can see here, this pullback here is not a complete pullback. That's why this point of interest is still valid. It is not mitigated. It was mitigated with an invalid pullback. So that's why this point of interest is still very, very valid. So that's why the market came back and then reacted from this zone. So for those who use fair value gaps, they can use them as their point of interest. But for me, the last order flow that the market formed before this break of structure, that's where I'm going to mark as my point of interest. So you can see very clearly if if someone took a trade from this zone, you can see very clearly. I'm sure it's a very good risk to reward ratio. Let me mark it correctly. Stop loss below the zone, and then TP above the swing point here, up here. So you can see very clearly it's a it's almost a one is to risk to reward. Let me adjust the stop loss below the zone. So it is a 1:2 risk to reward ratio, and it's a very, very good trade, as you can see very clearly. So that's very simple. That's basically how I use my SMC strategy. I always look for inducements. I always look for correct pullbacks and my point of interest. So that's how I mark my zones. And thank you for watching this video. And if you have any inquiries, you can reach me out and or comment anything you want me to talk about. I'll always use the recommendation. Thank you.